Hey traders, John Fortune here of this week's Weekly Forex Forecast for the 27th of May to the 31st of May 2019. As always, we're going to start off by looking at the US dollar index and oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, just quickly before we start, just to note, going into next week, we may be a slightly tricky week in the dollar pairs. We do have on Monday, we have a UK and a US bank holiday. This means that there may be a lack of volatility in the markets, generally speaking. So we're likely to have a 4-day trading week next week. And we also have the European election results coming out tomorrow. And this has the potential to cause some gaps or some volatility or some movements in the dollar pairs because of the relationship between the US dollar index and the euro going into next week. So just bear that in mind going into next week. Now, looking at the US dollar index, the way it is currently structured this week, we were looking for this bounce from the 97.34 to finish this fifth wave to the upside. We were looking at this fifth wave rally in previous videos, and we did get this bounce from 97.34, and we took out the previous high here in the dollar index, although we failed just slightly to take out the target, the 98.50, which is the next key resistance to the upside. As a result, we go into this week with a technically bullish bias on the dollar index. However, we have to take into account, if I zoom out here, what we were looking at in previous videos, that there is a very good chance now that this is the 1, 2, 3, 4, and because we took out the top over here as the 5, there is a chance that we start to get this double top pattern, which of course is a reversal pattern in the dollar index. So the problem we have here in the dollar this week, which makes it a little bit tricky, is that we are structured to the upside currently, but we are also at a point where we could have a potential reversal. So how are we going to use this information? Because of course it sounds conflicting, and it is. It just simply means that this week the dollar index is not giving us as clear an indication, and we're not able to use this as a tool this week as much as we would do or we would like to, and we have done in previous weeks. So very simply put, because of the conflicting nature of the structure in the dollar index being at the end of 5 waves, but also still structured to the upside, because there's nothing to say, for example, that this fifth wave has actually finished. Could end up with something like this. Okay, and we could end up with 5 waves of a fifth wave. So we don't know for sure that the fifth wave has finished, but we might end up with some weakness next week. So to cut a long story short, we're going to have a neutral bias on the dollar index this week. It means that we do not have a clear indication of the direction of the dollar index this week. And this means that we're going to trade the pairs on their own merit, on their own individual structure, rather than using the dollar index this week to form a bias one way or the other. So next market we're going to look at is crude oil. Now, last week we were sitting at the 62.93, and we highlighted this as an area to look for bearish setups. And you can see we did get a nice decline to the downside, taking out the first target here at the 60.60, which was this range bottom. And we also broke through and took out the secondary target to the downside from last week. It wasn't highlighted as a target, but it was a second level to the downside at the 57.52. Very simply put, going into this week, we are looking for further declines to the downside in crude oil. If we can get a correction, and preferably if we can get a pullback and a retest of broken support, this range bottom over here, turning resistance at the 60.60, this is going to be a great place to start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set at the 56.99. And if we can get a breakthrough here, we're going to be looking down towards the next key of support to the downside and target 2 at the 55.78. So the next market we're going to look at is euro dollar. Now, just very quickly before we do euro dollar, a quick message to the TFT members watching this. Because of the bank holiday on Monday, we will not be doing the live session on Monday. We'll be doing it on Tuesday morning instead. So just bear in mind, there will be no live session on Monday for the TFT members. It will be on Tuesday morning instead at the same time. Now, in terms of the euro dollar, we have highlighted in previous videos the 1.1255 as an area we were looking for potential shorts down towards the target set here at the 1.1119. You can see we did have a really nice move down into the target from the 1.1255. We had this bounce to the upside, and this may be the start of a potential reversal pattern known as a double bottom. However, it's a little bit premature to be going long in the euro dollar at the moment, because this pattern is not confirmed until we start trading above the 1.1255. So as long as we're below the 1.1255, we are primarily looking for further declines to the downside. So any pullback in this area, and preferably, as always, if we can get another test of broken support turning resistance at the 1.1255, this is going to be preferable as we get a bigger risk to reward. There's more room to the downside, but any pullback in this area we're going to use as an opportunity to start to look for bearish formations and patterns. And we're going to once again start to look to initiate shorts down towards the next key area of support to the downside, playing this as a bit of a range at the 1.1119. And if we can get a breakthrough here, we're going to be looking down towards the next key area of support to the downside and target 2 at the 1.1022. So next market we're going to look at is pound dollar. Now last week we were looking further declines in the pound dollar down towards the target set at the 1.2662. You can see we did trade into this key area of support, and we actually held this area last week, and we sit above it going into this week. Now very simply put, we are trending to the downside in the pound dollar, so we are looking further declines. The slight problem we have is we're looking for shorting opportunities. We're trending to the downside, but we're at support. We may get a pullback to the 1.29640, which is previous broken resistance. As you can see, this would actually be counter trend. So any longs in this position would be counter trend. So what we'd prefer to see is if we can get a pullback to the 1.29640, this will give us our opportunity to start to trade in the direction of the trend. And we're going to be looking at initiating shorts back down towards the key area of support at 1.2662. And if we get a breakthrough here, and it may be the case that we actually get a breakthrough here without pulling back, we may get this opportunity instead. This is going to give us an opportunity to start to look for bearish formations and patterns. And once again, we'll be looking at initiating shorts down towards the next key area of support to the downside and the target set, the 1.2481. So next market we're going to look at is US dollar Japanese yen. Now last week we highlighted the 109.09 as a potential bounce point in the US dollar Japanese yen, and we also highlighted this target previous broken support, potentially looking to turn resistance to the 111.04, and this gap which we were looking to be filled all in the same place over here. So last week we were looking for another push to the upside in the dollar index, and we did get that final push to the upside in the dollar index. However, we failed to come all the way up and close this gap, and this is the problem you have when you have these kind of counter trend opportunities, because we are still trending to the downside in the US dollar Japanese yen. So very simply put, going into this week, we're no longer going to be looking for this corrective move to the upside in the dollar yen. It's just too risky now with the dollar index where it is. The next opportunity we'd like to see trading to the downside in the US dollar yen would be if we can break this key area of support at the 109.090. This would give us the opportunity. We're going to start to look for bearish formations and patterns. So we get a breakthrough and we get a retest of broken support turning resistance. And we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set, the 108.12. So next market we're going to look at is Aussie dollar. Now last week we highlighted the 0.69640 as an area to start to look for further declines to the downside. We are still trending to the downside in the Aussie dollar, so we have no reason as it stands to look for anything other than bearish opportunities and shorts in the Aussie dollar. We pretty much went nowhere last week. This was the price action from last week. So you can see pretty much negligible. We hardly moved at all in the Aussie dollar. So going into this week, the same opportunities still stand as they did from last week's video. If we can get a pullback, and preferably if we can get a retest of broken support, turning resistance at 0.69640, this is a fantastic area to start to look for bearish setups. And if we get the right kind of bearish formations and patterns in this area, we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set, the 0.6830, and if we can get a breakthrough here, we're going to be looking down towards the next key area of support to the downside and target 2, the 0.6746. So next market we're going to look at is New Zealand dollar. Now last week we traded into the key area of support and the target set from last week at 0.6501. You can see we actually bounced to the upside from this key area of support in the New Zealand dollar. So very simply put, we have a similar situation here as we have in the pound dollar. And that is that we are still currently trending to the downside, but we are at the key area of support. So very simply put, we're still only looking for bearish opportunities in the New Zealand dollar. If we can get a pullback and a retest of the broken support turning resistance once again, as we did over here at the 0.66060, this is an area we can start to look for potential bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set, the 0.6501, and if we can get a breakthrough here, and again we may not get this pullback, the opportunity may come when we break straight through like this, this would give us an opportunity once again to start to look for bearish formations and patterns on a break below the 6501 and a retest. And if we get the right kind of bearish formations and patterns in this area and we get this kind of price action, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 0.6425. So the next market we're going to look at is US dollar Swiss franc. Now last week we were looking for further declines to the downside in US dollar Swiss franc. We did come down, take out the target set at the 1.00470. Very simply put, we are still structured to the downside going into this week. If we can get a pullback, and any pullback in this area is going to be used as an opportunity to start to look for bearish formations and patterns. And if we get a pullback in this area, and preferably if we can get a retest of broken support, turning resistance to the 1.00670, this is going to be a great place to start to look for bearish formations and patterns. And if we get the right kind of tradable setups in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 0.9975. So next market we're going to look at is US dollar CAD. Now we've been looking for further advances from the 1.34010 for a while here, and you can see we've just been chopping above this key of support and we've bounced once, twice, 3, 4 times. This is very reminiscent of previous structure we've seen over here. We had this in the past, key area of support at the 1.33060, and we were looking for a rally from this area. We bounced once, twice, 3 times, 4 times, 5 times, 6 times here before we did finally get this rally to the upside, before this corrective structure resolved itself with an explosive move to the upside. So very simply put, we are looking for a similar outcome as we had over here with these multiple tests of this key of support. We're still looking further advances to the upside in the US dollar CAD. We tested this area once again last week, so going into this week you can see we're already starting to get a correction, and any correction in this area, preferably if we can retest once again, that would be fantastic, the 1.34010. We're going to use this as an opportunity to start to look for bullish formations and patterns, and we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set at the 1.3564. And last but not least, we have gold. Now, last week we were looking for a pullback in gold, a correction towards the 1293.52. We have had this correction now to the upside, so very simply put, going into this week, we're looking for declines to the downside in gold. We may come up and get one final test of key area of broken support, turning resistance to the 1293.52. This would be preferable, as if we get a reversal in this area, we will not have as much risk to reward to the downside as we would if we get some short opportunities from this area. But either way, we're going to be looking further declines to the downside next week in gold. If we get this kind of price action, this is going to be the preferable place to start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside and target set, the 1266.80. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2, the 1255.90. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far. I want to wish you all a nice weekend. I hope you have a nice bank holiday, those of you who have got Monday off. I also hope you have a fantastic week next week. The only thing left to say, guys, is take care and don't forget to trade safely.